And so when you stair step and it moves up and the 5 minute holds and it moves up and the 5 minute holds, all you're doing is raising your stop to the gamma lines just below and just walk the trade up and look at what happens on the 5 minute. It gets finally into the call wall. It's still pulling back for higher lows. Your stop should now be that 59.75, but it's also where you have to keep in your head because we just had a savage short covering. And so if it is short covering, remember that's buying the market, get out of the market, not buying the market to stay in the market. So the amount of upward thrust that a chart has really shift of something that's short covering if they use the level. Now, here it is, comes into the 5 minute, and it starts moving sideways. So this to me is breaking a trend on time and on price. Two things are going to happen. One, going to break through call resistance, or two, it's going to break low call resistance and gently down. For me, because I use buy, once it begins to flatten, I say to myself, you know what? I've got this flat moving average. I'm going to see how far it bounces above that area. That's my call resistance. I'm going to wait for it to break, lose my moving average, and then on the failed bounce, I'm going to get in. So here it is, breaks the moving average, loses the moving average, and fails to break down. For me, I could potentially get short at 59.86. That being said, my stop has to be above the high wick of the day. And notice, they come right in and they take it out. Who said, hey, I'm short here? They come in, they maybe take 3-4 points ahead and then rotate over. That happens. And so your first thought with a sideways pressure then should really be, can I, after I made a low, can I break up and then lose that important call resistance again and end up on the market? You could get chopped up right in here if you was, let's say you took too much size. Or let's say my your stop was too tight. Or let's say it was right, it came and got it, which is all things that happen. Here's the biggest thing about trading. When you trade, you right, you're wrong. That's it. And once you get in, you have to say, all right, if I get stopped out, two things could be the case. One, my timing's off, or two, my thought process about future motion is off. So for me, because I felt this was a short squeeze, again, because of the big candlestick of downside motion, I was looking for the market to fail up here at the call resistance. And so essentially, any place along the front line break gives me my short with a wider stop. So if I take the short there, what I want to do is add into as it fails, because now I'm under call resistance. My premise of short covering is very likely confirmation, and I can stair step into my next gamma lines. And so, oops, that should have locked it. So this gives me my opening range. It's just how I set up my trade. So for me, this short action opens up very nicely, and all I have to do on my 5 minute is say, all right, am I still making lower highs and lower lows? High, low, lower high, lower, lower high, lower low, lower high, and I'm gonna walk to the bottom, opening candlestick formation, 1 hour. So the key to success, a lot is, don't mind. So the key to success in my mind, seeing the gamma lines, is make sure your trend is moving in play, and then look at where the high volume candlestick for the prior day is breaking uh, the formation, whether it continues down, so that all those shorts are very happy and they're going to walk down into these next lines here, or they break out and they're scrambling to cover because they're flat footed. So, in this particular case, now our target levels, my first target level would be the low of my 1 hour candle formation. But notice how, and this is very interesting, this happens very often. When I get a draw for a 1 hour highest volume candle of the day, I am going to end up seeing high volume nodes and gamma lines. It is extraordinary how those two pieces work together. Absolutely love them. So what we know is that there's a potential floor beneath us. So the question is, again, where are the best places to get involved in these trades? And my thought is always a line, collapse into your 5 minute, and then watch the formation tell you you are in the right direction. Let's say you didn't stare at the market until 7 o'clock and you were trying to trade this. Easily, you could use your lines, which come out the prior day, at close of the day. You could use your lines and go, okay, here's some, what's my trend? Up. Okay, am I above the candlestick formations that tell me I'm an upside pressure event? Yes. Did I just break all resistance line for the zero DTEs? Yes. So, does that mean I need more? Yes. If you blow right through it, and then the next candlestick opens up, and there's no wick to chase it, your stop will underneath that call resistance wall, sitting right there for you, and you can simply walk it up. If you're the type of person that goes, hey, I don't want to use 5 minute, I want to use 2 minute, doesn't matter. Whatever you want to, just remember the trend is going to tell you how strong the move is. The gamma lines will tell you where the stair steps are, and your ability to hop in and manage your risk comes from how you assess those candlestick formations. And literally, if you're making higher lows and higher highs through every single one of them, when you look at these candlesticks, they are incredibly bullish. We're very afraid to buy candlesticks that look like this, and the question is, look, I'm afraid to buy a candlestick here because it's not telling me anything in a direction or not. But when it starts doing this, you're in great shape, and that's how you can use these lines. Don't look at the chart and say, okay, I see my method Q line is here, and I missed that low from the high volume node for the 0 so now it must be short. So now I've got a short. But if it's moving straight up, shorting is a bad idea, right? I don't like looking at tight time frames because they confuse me. I'm like a cocker spaniel in terms of attention. And so I am literally, I fall very far out of focus when I can't actively look at something for a longer time frame so I can go, I see what's happening. I see that these short sellers potentially are going to want to reshort. Buyers that threw them off course are looking for some kind of double top. And I'm sitting between some very important levels. So guess what? There's no harm in doing nothing and waiting for price to come to you. So as we continue for whatever part of the day, let's say we leave this presentation and go about your day. If you're thinking about, well, I wonder what she's going to do, I'm going to be looking for buy zone at around 58.93. I'm going to wait for them to present, and I'm going to wait for the buyers to get involved. Then I'm going to take a trade to the north. I might move into a 15-minute candlestick formation if I feel that that's appropriate. Let's take 10 kilos. That be okay, Pablo?
Yeah, I think I have a couple of good examples. If we look at NVIDIA, and if we, of course, NVIDIA yesterday had like big news, and if you switch, you go in the indicator and you switch the end of day levels to the intraday, I think it's going to be very interesting to see. So it's very easy to do that with Transpider. It's all through API. And if you change to a 5 minute, let's say that yeah, open higher, so there was a gap between the close of yesterday and the opening of today. But let's say you want to get involved, right? And as you can see, the price opens high, but then comes down, right? And where does it stop? At the one day minimum for the day. So, and if you were short, that could have been target. If you wanted to get in, that could have been a nice scale match for 20, 30 minutes, basically stored right there. And then now I don't know what's going to happen at the end of the day, of course, but that could be a nice entry point as well on NVIDIA.
So let's talk a little bit more about this. Let's talk about how it might look if indeed this resistance wall becomes the floor, right? So what we first saw is that savage fade down, and if you're like and you like to draw these sorts of things that map the first hour of trading, whatever it happens to be. So what we first saw is that savage fade down, right? So this is the opening range. It moves up. Look, this is absolutely gorgeous. Of course, I look for the hourly, and if I see the gamma line there, my thought is I want to know if there's power to money, or I want to know if it's a inversion, right? And so I see the call wall here. I see the 1 day minimum. I'm going to be thinking to myself, this level 2, I need to see if I can get short on the bounce here. And then my first target, of course, is going to be my opening candlestick low to go through range. But my second target is going to be the call resistance. My third target, not until all the way down here, a high volume node for the 0 UTEs. So this is going to be my range. Now, I suspect that if video didn't stay, but easily if you stare down that hourly, okay, it's testing there. Let me see if I can get a failed retest because obviously I made it low. Let me see if I can come in and make another um, failed test on the high, and then I can take a short. If for happenstance you're very bullish on NVIDIA, says, I published a video today. I see the 1 day minimum. I'm gonna try and take that trade. So I've got a 2 minute chart up there. And so here's how you use these walls combined with price action to tell you can move in the right direction. First thing that happens is you fail to head low. So it comes in and it hits that 1 day minimum, and your thought's got to be, okay, it only lost it by about 15 cents. And now it's running away from it. Your thought should be, okay, what's the overall trend here? High, low, lower high, lower low. If it bounces, physics suggests that the downward pressure is going to find lower sellers until it stops heading lower. So literally, very patiently, you will see this happen and say, you know what? I'm going to put the order out here at 139, and my goal, see, my formula, goal is going to be, can I first get to the bottom of the opening range, and then can I get to the top? And I would left it that way as long as I could. But that's how you look for price action to tell you that these gamma lines are going to hold. The beauty of it is that they always will tell you something. The way we have problems using this, that we jump the gun and we anticipate ahead of time what we think it's going to do instead of using the data that says, how about we know what they're trying to do there? Let's see if they win, or let's see if they lose. And if they lose, you can chase it all the way down, because very often that's some sort of huge market move, sort of like what happened with the Qs. Out of the range post weekend and started really moving fantastically into what? The 1 day maximum. Literally, that's where it stops almost at 4:30. And so this thought should always be, have I isolated the high volume list? Do I think about what that means if all that volume is sitting in the wrong direction? And if it's sitting in the wrong direction, what does that mean? And it means those traders are going to puke. It does. It means they're going to puke. And so the speed of how it tells us the likelihood that it's going to continue. The faster something moves, the more likely there a distance event of higher magnitude, right? So this morning, again, my thought is, let's go back. And if anybody in the chat that says, hey, can you show me this trade using this whatever, right? So throw a ticker out and
Example I'm looking for is that you see.
yeah, yeah. All right. So wow, you're not kidding. Look at that. Man, these things are just I don't I don't even I don't even know how I worked without them, really. They're just absolutely fantastic. Moving all our lines in the sand. But we've got And we have a lot of things going on in the bond market. We have no idea what's here or what's in general terms. So let's see what the highest volume event is. 9 a.m. this morning. That's fairly common for it to be the first hour of the day as opposed to the last hour of the day. And so you can see the trader sitting in there.
Aló, ¿cómo está?
They can't. Zero DTE.
¿Qué?
High volume.
La tía quiere hablar contigo.
It's quite a trade might have done something like that. Right? Old resistance, sports, old resistance, new resistance. But they're literally caught in here. So you as a trader should be saying to yourself, okay, wait a second. Either this is going to break out above this volume, or we're going to move down and stay trapped in the zone. Oh, this might be a trade setting up right now. Let's go to the 5-minute. Right? Obviously, if you see it in a 5-minute, the price option tells us it's in really low. We are breaking trend by time and not price. Meaning, instead of going straight up, we're sort of meandering, not breaking the low, not breaking the high. So, what's the trade? This is a tricky one, simply because trend, the master commander, and see another gamma line at 30, and then even one higher above 3360. What would I do? Ideally, I would love it if it came to old resistance support at about 30, 29, and I would take a while there. I would notice that my wicks are sitting sort of halfway through here. So my stop would be about 32.20. So I have about 7 points of risk, but I'm looking for a wall because the trend is up. Now, let's say I'm wrong. I have 7 points of risk, right? So I might use a couple of micros rather than just minis. But I know what my risk is. Fine. If you say, well, I think it goes right back to the bottom here. You could take a short right here at 30, 40. What would your stop be? It would have to be above this thing. That's 33.47, 33, maybe 49. There's another gamma line above it. So it might be better to go, but let me put my short here at 30.45. And if it fills me, if it doesn't fill me, hey, another good trade is coming around the bend. That's also an important. Fabio, you have been so great to not let me damn wrong. I have just capitalized all of the conversation completely, starting to feel pretty bad about that, I have to tell you. But I love I absolutely love the way this tool gives people opportunities that give them true edge. And listen, a lot of times, I'll liken this. This is one of my husband's analogies. In the hands of a master craftsman, a skill saw will create a beautiful furniture. In my hands, we're up to the emergency room with a gash wound somewhere. And what I want to say is that these tools are as powerful as that carve up the market. The question is, do you develop the skill to use appropriately? So Fabi and I are going to spend more times like this in the future, looking over these kinds of charts and working through mechanical flow and what we see in the market and that sort of thing. And so that's something that I want to urge, really dig in and say, I'm going to learn how to master this. And I spent a lot of time in the future space, but these things are incredible with books, all kinds. High liquidity, of course, is my favorite. Take a look again. Look at how beautifully Meta came up here. Now listen, it's just shy of the wall. So don't get your fingers in a twist if you go, hey, I wanted to short it up there and it didn't come in. Well, if you think about things like that, you're going to go, you know what? I'm going to chase trades, and you never want to do that. If it does not come into the line, your thought should be, I wonder what the traders are up to. I wonder what they're thinking. If there's price action that's not strong enough to get up to a gamma line that is very close to that round number, incidentally, what might it do? Well, I'll tell you what it might do. It might fall into the lower lines, and indeed, that's what it does. And so, again, I'll use my
I want to share a couple of examples going into the dashboard on why the data can give you an edge as a trader. Does that make sense?
yeah, let's do that now.
Yeah, please share.
Let's do that now. You can take that, you can take that, screen over if you like, but absolutely beautiful. I suspect easily that, um, that comes into that 640 line, where that most recent gamma line is positioned, and I think that'll be, a super interesting trade. All right, ready to go.
Basically, like for those who have followed us 2 months ago, we had a problem with a lot of our trades, and we started a very big part of this. Was know what you do, but your data is overwhelming, and I don't understand how to find value, how to. So then what we did is, okay, like let's actually try to simplify data to the maximum. Let's make it as easy as possible. And what we've done is we developed those values that you see right here. This is our Q score. The idea behind it is think about as a rating agency or an analyst that is rating a company from very bullish, normally 0 to 5. And basically the idea is really like, okay, like is this company a bullish company, a bearish company, and how is this? So our rating is based on 4 factors. Let's look at what the option data is like. We have our option score goes from 0 to 5. 5 is very bullish, 0 is very bearish. We have our volatility score, we have our momentum score, and we have our similarity score. So now you see NVIDIA clearly we're in a very strong uptrend, also given what happened yesterday with the earnings. But let's go back in the past and let's go actually go down a little bit and let's actually look at the historical data that you would have got during the cross time. So we go back 1 month ago and suddenly we are at 0 option score. So 1 month ago the market was in fear, immediate drop, started with really bearish of the tariff situation, and then in a matter of a few days, the option score went from very bearish to very bullish. This is in a matter of 3 days. But if you are monitoring this as a trader, you could have got in right here. This was under 100. We're now at over 130. So this would have been 20-25% return, maybe in a matter of a few weeks, just by looking at what the big guys are doing and how the option chain is changing. So
Love that. Gold.
yeah, and then you can do the same on Tesla, right? So if you look at Tesla, another experienced a very, very strong move. I mean, take a look at this. We were basically super bearish. It went super bullish. We went from 240 to 50 all the way to 50. That's like 35% move in a matter of a few weeks. And this is strong as coming from the option market.
So may I ask a question right there at that very score, option score? So if I were looking at this right now, based on what the option score is showing on the exchange, would it be a fair place to take a look at a short with defined risk?
So I don't want to, this is not or anything, but what you want to monitor is you want to monitor those big moves, right? So we went from a 0 to 4 in a matter of 2 days. So now we were yesterday or the day before we were at 5, now we're dropping. So I think it's good to monitor what this value does. And on top of that, what we've developed is a screener based on score. So let's imagine that you want to look for short opportunities, right? So let's say that we want highest decrease in option score versus now we can go into the screener and we can, for example, see that alpha dropped 3 points compared to the previous day. So we saw a -3 change in option score. Norwegian dropped 3 points. If you go then we can open it up and we can see all the different models. So you're now in kind of like a neutral, but very bullish previous day. And then here you can go and see the same chart right there. So, this is how you would monitor event stock. Yeah. Yeah. So just some ideas on how you can then leverage data. Not only, of course, the leverage in the chart are very important, but also do a much deeper analysis by looking at the models that we provide with the dashboard as well.
It's awesome. This has so much power. I mean, truly, we have got incredibly strong analysis, investment grade analysis at the tips of our papers. It's really fantastic.
And also, like those scores were also pretty useful during the drop of February, March. But we go back to, let's see if we can go back in time to March, but let's see, we can always go back in time here. So go back to maybe we go back to March. We were of course in a different world back then.